Most beginners think picking individual stocks is how you get rich, but here's the truth. You're more likely to lose money doing that than if you just bought one boring index fund. Today, I'll show you why index funds beat stock picking for 99% of people. Beginners see people bragging about Tesla or Nvidia gains and think, I could do that. I used to think that way. I thought I was going to be the next golden boy, making millions picking the right stocks at the right time. I remember when my mom told me about this hot stock, GEBRF, I threw in $1,000 thinking I was about to make bank. Guess what? I lost a whole thousand while the S&P 500 quietly went up. That's when I learned buying stocks from hot tips is a terrible strategy. It's like your friend telling you they won $500 at the casino, so you think, I'll win too. Then you lose your rent money on blackjack. The reality is, for every winner, there are 10 losers you don't hear about. Even professional fund managers who do this full-time fail to beat the market 9 out of 10 times over the long run. So what's the alternative? Instead of trying to outguess the professionals about which stocks will win, you can buy index funds. What's an index fund? An index fund buys and holds all the stocks in a broad market index like the S&P 500 without your having to pay someone to pick stocks for you. One of the most popular ones is the S&P 500 index, which has the 500 biggest US companies in it, like Apple, Amazon, and Tesla. When you buy an S&P 500 index fund, you own a tiny piece of all 500 companies. Instead of betting on one company, you're buying a piece of hundreds of companies at once. If Amazon tanks, you'll barely feel it because you own 499 other companies. Think of it like this. Stock picking is betting all of your chips on red at the roulette table. You might win big, or lose everything. Index funds, that's like betting every number at once. You're guaranteed to win something. Over 20 years, the S&P 500 has averaged around 10% annual returns. Meanwhile, the average stock picker, they underperform by 2 to 3% per year due to things like bad stock picking, bad timing, and expensive fees. Let me be blunt. If you're picking individual stocks right now, you're probably losing money and don't even know it. Even if you're not losing right now, in the long run, the odds are not in your favor. Now, if you really want to pick stocks, I get it, it's tempting, but I would suggest investing no more than 5 to 10% of your portfolio in individual companies. Put the rest in index funds. This way, you can scratch the itch without risking your retirement. Stock picking is like eating dessert. A little bit, yeah, it's fine, but making it your whole meal, bad idea. You don't need to be a genius stock picker to get rich. You just need to stop gambling with your future and let the whole market do the heavy lifting. Now that you know index funds are the way to go, let me show you exactly how to build a portfolio that works in any market condition. In the next video, I'll break down Ray Dalio's All Seasons portfolio, a simple strategy designed to protect your money regardless of what the market does. If this was helpful, subscribe so you don't miss any future videos.